guys, now we have a good grasp on our topic about cash. Right now we're going to move on to another topic called the receivables, which is another current asset and is much more complicated compared to cash. So when we are talking about receivables, we're not just talking about the accounts receivables. It also covers the topic like the allowance for doubtful accounts, the loans receivables, the notes receivables, and the receivable financing. So first of all, what is a receivable? A receivable is a legitimate claim that is expected to be settled by a receipt of cash from others like the customers, the debtors, etc. Classify receivables as either trade receivables or non-trade receivable. So a trade receivable is a sale on account of goods or services in the normal course of business, and the non-trade receivable are the ones that doesn't fall into the definition of trade receivables, like loans to officers and employees, advances to affiliates, etc. Sometimes you as a seller would give trade discount to a customer, which is always deducted from the list price prior to recording the accounts receivable. That means if you try to sell an item for 100 and you gave 5% trade discount, that means the receivable is recorded as 95 right away. Sometimes a seller could also give a cash discount, and it is used as an inducement for prompt payment of an account. So if a seller gave cash discount 2/10 and over 30, the interpretation for this one is that it is payable within 30 days, but you will receive a 2% discount if it is paid within 10 days. A cash discount can be recognized in three ways using the gross price method, the net price method, or the allowance method. So a gross price method is used by not recognizing cash discount until it is actually taken. Let's say if you sell a car worth 100,000 under the gross price method with a cash discount of 2/10 and over 30, then your accounts receivable will be recognized in full. Our journal entry for this would be a debit to accounts receivable and a credit to sales for 100,000. So if the customer would pay within the discount period, which is within 10 days, our journal entry would be a debit to cash for 98,000, a debit to sales discount for 2,000, and a credit to accounts receivable for 100,000. Why? It is because we receive cash, which is an asset that serves as the payment from the customer for 98,000, which is already the discounted price, and we credit accounts receivable for 100,000 because your receivable is already paid in full. So the debit and the credit side is not balanced. The debit side still needs 2,000, that's why we put on the debit side sales discount for 2,000. When we are recognizing sales discount, it is always put on the debit side. So what if the customer paid in the 15th day? We no longer recognize sales discount of 2,000 because the customer exceeded the threshold of 10 days. So our journal entry would be a debit to cash for 100,000 and a credit to accounts receivable for 100,000. Same scenario, but we're using the net price method. First, when we're using the net price method, the sales is always recorded net of cash discount, which means the cash discount is already deducted from the sales price. If we're going to make a journal entry on the date of sale, it would be a debit to accounts receivable for 98,000 and a credit to sales for 98,000. Notice that we don't recognize it at 100,000 anymore because we recognize the discount in advance of the actual payment. If the customer paid within the discount period, we debit the cash for 98,000 and credit the AR for also 98,000. There's no need to recognize a sales discount because we're using the net price method. But what if the customer paid beyond the discount period? That's the time we're going to recognize the sales discount forfeited, which would be put up on the credit side amounting to 2,000, and we're going to recognize the cash for 100,000 and the credit side accounts receivable for 98,000. If we're going to use the allowance method, the accounts receivable is recorded the same way in the gross price method. Accounts receivable would be debited in full for 100,000, but the sales would be credited net of discount, so we credit only 98,000. And we also credit the allowance for sales discount amounting to 2,000. If the customer pay within the discount period, our journal entry would be a debit to cash for 98,000 and a debit to allowance for sales discount for $2,000, and a credit to accounts receivable for $100,000. But if the customer pay after the discount period, the journal entry would be a debit to cash for $100,000, a debit to allowance for sales discount for $2,000, a credit to sales discount forfeited for $2,000, and a credit to accounts receivable for $100,000. So that's it for today, Accountaholics, and I'll see you in the next video.